Good day, all. Ira Epstein of Linden Associates with your financial market wrap-up for a day of news, and it was a day of news, not involving the president per se, and this is Wednesday, and we are now on the 27th of February, 2019, just after 4:30 p.m. Central Standard Time. So it was a day where Michael Cohen, the president's ex-attorney, wrapped up probably a 7-hour news conference, quite interesting. Robert Lighthizer was blowing up the deal that the president's doing with China. I expect Steve Mnuchin or somebody to come in and smooth that over, but he certainly played the hawk guy. And of course, then we had Jerome Powell in the morning coming out, and he was talking before the House and talking about areas in how they're going to run off the balance sheet. I had mentioned this yesterday that I didn't think it was enough yesterday. He did more today, but he was doing damage. He sent interest rates actually higher. As you can see, Mr. Lighthizer did nothing to help the grain market. In fact, the corn-soybean ratio is moved out to historic numbers as he's talking that the deal won't just fly on agriculture purchases. It needs a lot more from the intellectual property area. You can see how the dollar got a bid after Mr. Lighthizer, after Mr. Powell was doing his best to, I think, try to explain how the balance sheet's going to run down. But in order to do that, our interest rate's going to go up, and I think that surprised the markets. And gold, silver down a little bit. So as we take a look at where we're at, we're still up 3.85 for the week. This rally has not ended yet on the weekly area chart of just closes of the S&P since that Christmas Eve night, basically. What is happening, and this is what I had brought up to you in these videos, is we've run into a resistance zone in the market. Does it turn out to be anything more than that after the close? I don't know. I know that in the NASDAQ, a couple of the major stocks, Box and Fitbit, the earnings had come out and the market was disappointed. And after hours, I know they were getting hit, and that'll weigh on the indices a little bit, I would think. But in looking at this, you can see the sideways action that's all of a sudden started. We are at a pattern still where we've got the higher lows and higher highs. Is the market going to take out 27.70.50 or not? That's going to be a good question. It's 25 points away from where you finished. When we look at the support in the market, what's happening is you're giving the market time for the 18-day average to gradually eke its way up towards that last break low of 27.70.50. We're adding right now about 5 points a day, so it's still not going to be there. But even if you take it out, people will say there'll be support ideally between the 18 and the 100 day if you get a break. We haven't had a break yet. You haven't had a break this whole time of any real consequence in the market, but the resistance area showed up at the Bollinger Band, and now I'm looking right through here. The combination of the 200-day and the 18 will come together. Are we going to get a bullish crossover where the short-term average gets over that 200-day? That can happen too. In terms of momentum, I keep my eye on this part. I believe that in this case, the momentum is going to be giving up when it gives up right with price. I don't think it's going to lead it that much. And I say that because as prices go sideways, it's one of the phenomena that happen. So if the red line, not the 18, but the K line, closes under 80, that should be one of those instances where the price and the 18 and 200-day average all start coming together much quicker. When we look at the NASDAQ, it kept its embedded reading. The market is paying attention to the combination of the 200-day moving average in gray, this line being resistance with the upper Bollinger Band. The market is not trending here as defined by the swing line. You have a lower low and a higher high. You're in a sideways pattern. You can almost see that right here with the black Bollinger Band starting to go just sideways here. In the Dow, you still kept the embedded reading fully alive. You haven't taken out a previous break low in, my gosh, such a long time. You'd have to go back here to the beginning of the month before you've had a break low that was taken out on a daily basis. In the Russell, the 200-day moving average and upper Bollinger Band acted as we expected. They are halting the rally. This market during the day, when it was down near the lows of the day, not the not where it finished. 1569 was that number. You were down into the 70s. The market did rescue itself, so that's very, very important. It's kept the reading there, and the fact that the market was able to close tonight in the top part of the range means it's got to do more work to break that. So you're going to have to break through those lows probably to get anything going. In the VIX cash, I'm not surprised that after you hit the lower Bollinger Band, you got to rally up to the 18-day average of closes. I think the pros took off their positions there, and the market settled back at 1470, under that number, near the lows of the day. In the T-bond market, I've moved over to the June contract, and as you can see, you got a higher high, lower low pattern stuck in this sideways action. Momentum is down, which favors price moving down to the lower Bollinger Band, but because you're not trending, you're just whipping back and forth now in this, a very, very difficult market to trade, not giving you any real traction one way or the other, and the same thing has happened in the 10-year notes. If you focus on the dark black broken lines and price, they're all going sideways here. I now am committed to the sidelines. Don't see a trend to be doing anything with. TLT broke out to the downside with lower highs, lower lows. If we take a look at today's low, it's 120.28. The lower Bollinger Band, 120.30. You settled 120.43. So you went down to that lower number. I think the pros stepped in there, took some money off the table, but the trend is still down. And like the futures, you have this sideways action. In other words, are interest rates just going to hang here, or what's the next move in them? Right now, the market is acting like the next move is a bit higher on interest rates, and I think that happened when Mr. Powell was trying to talk today about the government coming up, or the Fed, I should say. It's not the government. The Fed coming up with a plan to roll off the balance sheet. To what number, he didn't answer. There's a lot of unknowns. I was on Fox TV talking about it and said that. I said, you know, while you're all saying low interest rates, take a look at the futures today. I said, they're not agreeing with what everybody's saying here. They're acting as though something else is going to happen. When you look at the dollar index, our question yesterday was when it got to the 100-day average, would it be able to break down to the lower Bollinger Band, or is it going to try first to rally up to the 18-day average of closes? We got a little bit of a rally today. The question still comes, this 96.36 level, but because the market is so oversold, I'm not going to say that I think that the pros will step in as sellers. I don't think pros like coming into overbought, oversold conditions. You have the overbought condition in the euro, and you're backing off now to the 18-day average of closes. We see a tight resistance coming in between the 100-day average and the upper Bollinger Band, but while the trend is up and the bias is up, the market is overbought. In the British pound, another vote, another whatever, and now it appears that everything's up for grabs there. I watched today Parliament with all that's going on, the House of Commons votes today. I wish I could tell you I have any idea of what's going on there. I don't think anyone does. I saw Ms. Merkel from Germany and Mr. Macron from France, and France is acting nuts. You want an extension on Brexit? Why? In other words, what's the game plan? Not just because you want more time, whereas Ms. Merkel was the dove. Well, if that's what you need. Interesting day. The market finishing at 133.22, still over the upper Bollinger Band, 2 days in a row in an overbought condition. In the Japanese yen, the market yesterday lost its embedded reading. Today the market comes down. If it's going to stay down, it's got to keep this embedded reading. Then it might be able to make a run for the lower Bollinger Band. If not, and you lose it tonight, you probably go back up to the 18-day average. A crazy chart, all happening the action between the 100-day average and the 18. Very difficult. For those of you that are looking at the March Bitcoin, today should be the last day of watching all this, basically. I have been saying I thought it would get back to the 18-day average of closes. You tell me what happened there. And I only said it because back here, when the market was doing this action, it started getting overbought, and then you had the higher high, lower low patterns, and then you had the lower highs, lower low. The line in the sand is where the market went to. It's pretty neutral. In Brent, I'm going to move now from May to May. So I'm going to go WTI May versus May Brent. And as you can see, you're narrowing the two in a little bit. The support in this trade is back at the 18-day moving average of closes in that 869 level. What the market is actually doing is you've had a correction where you had an embedded reading, you lost it. When you lose it, price often then sets up, if you're under the 100-day average, where price and the 18-day average make a run at each other. Now the market's back to the 100-day, but the way I'm viewing that action, I think it still owes that 18-day average. If I'm wrong, you're going to go up and over this high, and I'll just be proven wrong on that theory. In the crude oil market, this is April, and I think you still stay there while I'm doing the spread to just watch at the differentials. This is still where the volume is. You're in an overbought market that is not embedded in any manner, just staying overbought with resistance between the 100-day average in green and the upper Bollinger Band and support back at the 18. What is the trend? Up. You're into resistance in an overbought condition. Rebob gasoline. You had come down here, lost the embedded reading, went up yesterday, and even kept that loss. I still think price, even though it rallied today, and the 18-day average have a good shot of making a return at each other. In that gas, the first challenge of the upper Bollinger Bands failed, and the market is now into a bit of a pullback in an overbought condition. You know, if you're like me, you're not like me. You're not able to walk around an office and talk to a bunch of market technicians that are looking at charts. I get to do that. You don't. But what you need is what I used to do. What I used to do when I began, I'd buy advisory services. I'd want to see what these other people are thinking, get an idea, because maybe I had my own chart idea, and just maybe I needed a nudge on it, or maybe I'm not certain, maybe somebody else has got something, maybe I shouldn't be doing that trade. Well, I cover all these markets for you, and when I cover them, my charts look just like this. I'm not in that chart picture in the morning. I'm talking over live trade, and I'm giving you what I think the chart action looks like, where the pros are in the market. I'll tell you what I see from my versions of technical and fundamentals that are going on, and I promise you I'm going to throw out trade ideas galore. Anyone that's a subscriber to my morning services, which come with my full subscription, or you can just get the video on your own, well, you're going to see that I throw out ideas. And the whole idea there is, I realize a lot of people don't want their retail broker. They want somebody that's going to throw out ideas at them. They're not talking them into a trade, where other people say, you know, that's what I want to do. I want to work with Ira's group and do that. Either way you go, seems to work. For 26 cents a day, you can give this a try for 30 days. It's $7.95, and folks, after that it goes up to $15, but you can also buy a one-year subscription at $156, which gets you back to about $13 a month. We're not talking any serious money here. To give it a try, give us a call. If you've never tried this before, we'll let you try it, by the way. Just give my brokers a call. Otherwise, you can go to our website, www.iraepstein.com. Under either the word education or research, drop down the morning subscriber video, give it a click, and away you go. I'm Ira Epstein. You have a good day. I'll see you tomorrow.